Yes, hi, welcome. This webinar is hosted by the Oregon Farmers Market Association Oregon Farmers Markets Association, or OFMA. OFMA supports farmers markets with training, networking, advocacy, funding, and promotion. And we run workshops and peer learning circles every month. There are lots of opportunities through OFMA to connect and find support from the statewide farmers market community. You can check out our events schedule online and see what's coming next. We hope you'll register and join us again. And we also have recordings of all our past workshops in our YouTube library. So yeah, I'm really happy to see this crowd gathering here. We've already started with a few introductions. Thank you for popping in the chat and saying hello. My name's Amanda Cross. I'm here with OFMA and I'm hosting the Zoom room today. Also here from OFMA is Kendra Graves, who you'll be talking with via the chat window. And a little bit about how we do things here. We want to welcome that cameras can be on or off, whatever feels good to help you attend and participate. And please do participate. We're here for you to share your real experiences and questions about running farmers markets. And the other way to contribute is with your time and making sure you do give space for others to respond to you and ask their own questions as well. We've got a variety of options available for contributing. Maybe try something new today in a way you haven't before. You can type your thoughts in the chat or voice out loud when we have group discussion. And we also love to see the use of emojis and reaction buttons to share a quick sense of how something landed for you or to give affirmation to what you've heard. And really, contributing this way really means a lot to the speakers, to give them some feedback and see your reactions. So when you have a question, please use the hand raise option or type them in the chat as you think of them. We'll try to answer them as we go. So we heard from so many markets that they need help understanding the complexities of choosing a business structure and what the obligations are under those structures, along with concerns over how to successfully achieve tax-exempt status. So today we're talking with Lindy Lawrence, the owner and managing attorney at Rational Unicorn Legal Services, who has worked with several farmers markets on just these issues. So hi, Lindy. Please introduce yourself and let's get started.
Hi, everyone. Thanks, Amanda. Thanks, Oregon Farmers Markets Associations. And thanks to everyone here for attending. I feel so grateful that you were willing to spend your time with me wrestling with these difficult and complex topics. We're going to do our best to make it as understandable and as plain language as possible. But remember, we're dealing with state law as well as federal tax law. So we're here to untangle it all. I'm going to share my screen and dive in. Let's see. All right, everyone should be able to see my screen now. Just a little bit of housekeeping. This is meant to be legal information. So legal advice is when you're like, my farmer's market is such, and this is where we live, and this is how we operate, and what should we do? And that's very much based on your facts and circumstances. And that's the sort of conversation we should have together, one-on-one, so I can really dig into that and preserve your confidentiality and make sure I'm really understanding your facts and circumstances before I give you advice. Contrast that with what we're going through today, which is information to help guide you through your decision making and help you understand where are my gaps in knowledge and what questions do I need to ask and who can I reach out to if I need more information. A little bit about Rational Unicorn. We're a quirky little law firm founded in Portland in 2017. We've expanded. Now we serve the whole West Coast, Washington, Oregon, and California. We provide counsel to clients nationwide. So we have clients in Texas, Massachusetts, Florida, Illinois, Wisconsin, many of the places where you're calling in from today, but most of our clients are in Washington, Oregon, and California. Me, I am an attorney. I'm also a tax attorney and I'm a second career attorney. So, probably the most important thing about me is I'm a mom. I have two adult children. They're in college. It's been a joy to raise them. I'm a second career attorney. I spent the first 20 years of my career working in nonprofits, startups, and businesses. So, have a lot of hands on knowledge. And then I decided it's never too late to change your life. And I went to law school and I loved it so much. I got a second legal degree, this time in tax. And if you think I'm a nerd, you're right. I am a big nerd. I will try not to nerd out too much on tax principles, but y'all did ask me to talk about this. So I will try not to be a long-winded lawyer. Um, I will try to make this successful. let's just dive in. There's a lot to cover today. We're going to first talk about understanding nonprofit organizations from a high level. Everything that we'll be doing today is going to go from broad to narrow. So I'm going to cover some high level principles and get down into the weeds with us as we build on those principles. So we're going to talk about understanding, qualifying for, and applying for tax exempt status, fiscal sponsorship as an alternative to that. And we're going to talk through some successful and an unsuccessful case study so we can kind of compare and contrast what goes wrong and what goes right and how can you work on this. Now, throughout the presentation, I'm going to be pausing at the end of each sort of chunky section so that we can ask questions related to that section because there's a lot of information that we're going to be going over and there may be a lot of questions. Maybe if I'm really, really good at this, there won't be so many questions, but even I am not that good. And these topics are that complex. So we will be pausing between each section to have questions. And yes, please feel free to put them in the chat as well, and then we'll cover them then. Okay, so let's get into it. Why do farmers markets choose nonprofits? Well, I mean, it's pretty straightforward. Folks are drawn to the mission-driven, socially responsible, and financially stable opportunity that tax-exempt status offers. Also, we all know that we're doing this to like we want to be able to pay the bills with it, right? We want our operations to cover the cost, but at the same time, we're not really interested in generating a profit. So whatever profits are generated, it would be very nice to not have it taxed and under a federal layer. There are two layers to every nonprofit. There is the state layer where your nonprofit is located. Today, we will be talking about Oregon state law, but if you're in Wisconsin or Texas or Massachusetts, your state law will apply to you. But then the federal layer is the second layer, and it's what will apply to everyone who's thinking about tax exempt status. So most nonprofits or nonprofit corporations, every state has their own way of designating that. In Oregon, we're called public benefit corporations. In Washington, we're called nonprofit corporations. In another state, you might be called something different, but they're aimed at serving the public interest. They're really viewed as being owned by the public for a specific charitable purpose or mission. And so they can make a profit. The nonprofit designation is sort of a misnomer because nonprofits certainly can turn a profit, but they cannot distribute that profits to individuals. If you and I, if we own our own business and we make a profit at the end of the year, we're entitled to take that. If nonprofits have cash left over, all of that leftover profit has to be reinvested into the pursuit of its charitable purpose. Nonprofits can also pay reasonable compensation to their staff and their directors. So, like, it doesn't have to be purely volunteer based. You are allowed to make a profit, but again, you cannot distribute it to individuals. Now, at the federal tax layer, not all nonprofits are tax exempt. Some are just a nonprofit at the state layer and they haven't pursued tax exempt status because, I mean, you're operating at such a low level. Maybe you are under exemption limits. But if you want to achieve federal tax exempt status, that's that second step where you have, after your state organization is formed, you got to pursue that second step of federal tax exempt status. And that's really where you show all of your cards to the IRS and say, this is what we're doing. This is our charitable purpose. This is why we think we should be treated as tax exempt. And they're going to scrutinize and analyze and then put their stamp of approval on it and tell you which type of organization you are. So the key characteristics of nonprofits, no matter where they're located, we have limited ownership and control. They don't have any individual owners. They are literally governed by a committee with a board of directors. And that board of directors governs them within the limits established by the articles of incorporation and the bylaws. Any use of profits have to advance the charitable mission. It can't go to people as some sort of return on your investment or as like a return for your labor. You may pay them a reasonable salary, but you cannot distribute profits. And you can apply for tax exempt status, such as 501c3. And then, if you have tax exempt status, you can accept tax deductible donations like grants, gifts, and provide tax benefits to your donors as well. So, understanding nonprofit organizations. That was just like the introduction to get us all on the same page. I'm giving you this information because you will have the slides available to you, and I believe that the law should always be accessible to everyone. I'm not going to dive into each one of these statutes, but I think you should be allowed and you should have the information where if you wanted to look these things up, then you could go to the internet and do so. So these are the laws that apply to Oregon nonprofits. There are two types of nonprofits in the state of Oregon: public benefits and public benefit organizations with members. You don't have to have a membership base. You can use the term members in the colloquial sense, where members do not have legal authority to do things like vote on directors or change the bylaws. And many organizations find that it's much easier to run an organization without legal members. They go with more of the casual membership model. But you may decide that you want your organization to be a public benefit or a public benefit with members. Just keep in mind that if you do select that public benefit with members designation, your members are going to have these legal rights that are outlined here on this slide. Every nonprofit has to have a set of governing documents. You are going to need this at the state layer. You may have to submit them to your state Department of Justice Charities Division in Oregon. We have to do that. In Washington, you do not. Um, but every organization is going to have these because, again, the IRS is going to ask for them as well. So your articles of incorporation, that's like your first document. That is really the governing one, and that's something that we change sparingly and rarely. It forms your organization. It can be drafted online and submitted to the Oregon Secretary of State. Bylaws are a separate document that's generally drafted by an attorney. It outlines the rules, the rights, the obligations of your directors. It discusses your charitable purpose, and it talks about how your nonprofit will function. Your bylaws should answer not only the questions about what do we do and who are we, but how do we resolve disputes? How do we make decisions? What happens if our organization dissolves? All of those important questions as well. Inherent in these documents, and the theme of our conversation today is going to be this concept of the charitable purpose. What is the charitable purpose that you are built and organized around, and what is it that you are doing? Because, well, we'll get into it. Keep going. The board of directors are the folks that govern your organization. So once you form your nonprofit, you constitute a board. We have to have a minimum of 3. These are the people who are in charge of it. So if you're on the board, or if you are an executive director of an organization, you're helping administer a board, your directors have certain duties that are spelled out in your bylaws. Hopefully you know where those are, or you have a copy of them. And it talks about things like how directors are appointed or how they're designated. Um, the directors are obligated to certain fiduciary duties under law. Again, remember, this is Oregon specific, but these types of laws are pretty standard across the states. We're not going to see something where you have a nonprofit director who doesn't have, for example, the duty to serve in good faith, right? Or with good care or in the best interest of the nonprofit. Directors are always going to have those types of fiduciary obligations, which means if I'm serving in this role, this is the moral obligation as well as the legal obligation I have that my service must be in good faith and in the best interest of the organization. Um, Directors can rely on counsel and information as they're making these decisions. So if they're employees or officers of the organization that are giving you reports like financial reports or information about the activities of your organization, you can rely on that in making your decisions and in executing your fiduciary duties. Nonprofit corporations are also required to have a set of officers. So you have your governing board as directors, but then some of those people are often designated as officers. And these people are those with specific roles that have to include the president, the secretary, and the treasurer. Now I'm just going to pause for a second. This is really weird because Oregon says you have to have 3, but then when you go to register in Oregon, they only ask you for 2 names. So that's kind of confusing. The IRS says you must have 3, um, but you can have up to infinity number of directors. So So however many number of directors you have, we do have to have a certain number of them that are designated as officers. So just a little bit of a disconnect. You may have more directors than you have officers. You don't have to have vice presidents, but if you do, you can. Like you could have a vice president of operations or a vice president of like community development, vice president of education, those kinds of things. Officers are appointed or elected by the board. Your articles of incorporation or your bylaws spell that out. And officers are really there to ensure that the obligations, the legal obligations of the organization and the board of directors are met. So those are the people that are going to keep the minutes and keep track of where your bylaws are and keep records of anyone who may be a member and keep track of the dues and the finances. And there's sort of the people that are called upon to answer if the Department of Justice shows up or the IRS knocks at the door. The steps to forming a nonprofit are filing your articles of incorporation, generally with your Secretary of State's office, creating your bylaws, appointing your initial directors, and holding your first meeting to kind of kick things off, applying for an EIN from the IRS. And if you're in Oregon, you have to register with the DOJ Charities Division, and that's really straightforward. And then you have to renew and file annually. So that's your state layer obligations. That's just if you're in the state of Oregon, what do you have to do to get started and keep going? Those are the things right there. Should you work with an attorney on this? It really depends. If you have a lot of capacity in your organization to do this and you have folks that are capable of doing this, there may be a good reason where you don't need legal counsel. Your facts and circumstances may be unique. Maybe you're just like, look, we just want somebody who can handle this. We all have full-time jobs. This is our volunteer work. We need somebody who can capably shepherd us through this. Pay attention that sometimes the state forms will not ask for the same things that the IRS is requiring. So if you do intend to pursue that second layer of tax exempt status, which most people are, then we need to make sure that you have all of the proper documents and are doing it right because those will be submitted to the Department of Justice and to the IRS. We use caution. We recommend that folks use
Lindy,
caution. Yeah,
a question back to the positions. Somebody asked if
yeah.
a director can be elected to two positions.
It depends on what positions those are. A director can be a president and a treasurer, but you can't be both the president and the secretary. So interesting. And since you're required to have 3 directors anyway to constitute a board, I mean, it kind of doesn't make sense that you would have one person be 2 things, but you could in theory. Okay, great question. In fact, we're at the question and answer. So do we have any other questions about that, like state layer, really fundamental basics of nonprofit formation? Okay, we're going to keep moving. All right, this is where it starts to get really interesting. We're going to start talking about that second layer, understanding tax exempt status. So an organization may choose to apply to be recognized as a tax exempt organization. You would be treated as one of the many types of tax exempt organizations under Section 501c. Being tax exempt merely means we don't have to pay federal income tax on our income. Okay. Tax exempt status impacts your organization by determining which tax forms you have to complete every year. And it affects your donors by defining how much of their gift is deductible. Now, this is a tax principle. In every transaction, there are 2 sides, 2 taxable sides to that transaction. Like if I buy a car from Amanda, I have a taxable event and Amanda has a taxable event. And so we each have to understand what happens to each of us in that transaction. It's the same thing with an organization. When your organization receives money, you need to determine what is the tax impact to me. And the person or the organization or the donor who gives you money needs to determine what is the tax impact for me as the giver. Now, maintaining your tax exempt status really has to do with making sure you do all of that necessary ongoing compliance with the IRS and adhering to your organization's mission. You don't have to read these slides. This is going to be a lot of information. These are the different types of 501c organizations. So I told you there's 1 through 29 of them. You can see as we scroll through this that there's just an extraordinary number of them. And they're for sometimes very specific things like teachers' retirement funds or Black Lung Benefit Trusts or veterans organizations. Farmers markets really only fit into these four, either a 501c3, a 501c4, a C5, or a C6. So a C3 is our charitable organization. It's religious, educational, charitable, scientific, literary, testing for public safety. We can all read that. Section 501c4 is about civic leagues, social welfare, local associations. C5 is about labor and agricultural, and C6 is about business leagues and chambers of commerce and things like that. Why is Section 501c3 so unique? It's because um, okay. All of the organizations under C1 through 29, they all receive that one-sided tax benefit where anything that we receive as income is not subject to federal income tax. So that's what tax exempt means. But it is only Section 501c3 organizations, this very narrow group, that offer that reciprocal tax benefit to their donors. And what really makes you eligible for donations from other tax exempt organizations like family foundations and government institutions. When donors give money to a 501c3, they get a dollar for dollar deduction against their adjusted gross income, subject to some limits that we'll go into in a second. But remember, we're going from broad down to narrow. We've just narrowed 29 different organizations down to C3. And now we're going to explore like why C3 is so unique and what does it mean and how do we aim so that we get there. There are further nuances. Within Section 501c3, organizations can be classified as a private foundation, a private operating foundation, or a public charity. And it's this last one, that public charity, that very narrow category that we are all aiming for, or most organizations are aiming for. This designation determines two things. It determines what type of tax form you have to complete. If you're a private foundation like the Gates Foundation, you have to file a very complex tax form that has all kinds of disclosures and a bunch of schedules you have to attach. If you're a public charity, you file a different tax form that has different reporting requirements. So your designation within 501c3 will determine what form you fill out, and it also determines how much of that gift is deductible for the donor. For example, in private foundations, you can only deduct up to 30% of your donation. So if I was a really rich person with like massive legacy wealth and I wanted to shelter my wealth or get some sort of huge tax benefit, the federal government is going to say, sorry, rich person, you have limits on how much tax benefits you can get by donating to your own private organization. I could donate to a public charity and get 100% of that donation. But if I want to donate to my own private organization, my own private foundation, there are limits. And we can see why, right? Like the public policy behind that shows that we want public charities to have the greatest freedom, the greatest latitude to be able to operate in pursuit of their charitable purpose. But we want to keep a closer eye on those private foundations who are stashing their billions away and maybe hiring their kids to run it or who knows what, right? So just keep those things in mind. So right now we've just gone from C1 through 29 down to C3, and now we're aiming for this very specific public charity status where 30% or more of your donations are from public sources. Why? Why is 501c3 great? Well, public charity status is, I mean, if you did it on your first try, congratulations. For those of you who did it and missed, you know how difficult it can be. Public charity status is coveted and it's pretty special. It enhances your credibility as an organization. It gives you broader funding opportunities because you can apply for grants and state funding and private funding. You have higher deductibility limits for your donors, so donors love that. There is less regulatory scrutiny on you, especially from the IRS. They're just not as concerned about public charities as they are about private foundations. And community engagement is enhanced as well because folks love to volunteer with an organization or give their time and their resources to an organization that is seen as benefiting and enhancing um, their community. Okay, Questions about 501c3 status. I see maybe there's a couple in the chat. Are vendor fees considered a donation? Maybe. It depends if they're required or not. We're going to get into this. Okay. Any other questions about sort of that public charity tax exempt status? Okay, we're going to keep moving. Now, how to qualify for tax exempt status. This is where your charitable purpose really comes into view. So let's zoom out just a little bit. We're back to the C3, C4, C5, or C6. Now, in each of these, the language in the tax code says which organizations qualify. There is specific language in both C3 and C4 that I want to draw your attention to. And it's this concept of being operated exclusively for a purpose. So if you are aiming for 501c3 charitable status, you must be organized and operated exclusively for one of these permitted purposes. Now, as we look through there, there's not, I mean, like farmers markets are not going to qualify for all of these things. Many farmers markets are not religious. Um, they're probably not scientific unless you're doing like experiments or rotating crops. I mean, maybe I could see how there could be scientific principles that are enhanced. Probably not public safety, though. That one might be a stretch. Literary might also be a stretch unless you're doing a lot of published literature or something like that. Educational purposes seems like a better fit, though, for farmers markets, such as public education, poverty relief, erecting public structures, maybe not. Lessening burdens of government, that's a big one. I want you to think about that and put a little pin in that. Combating neighborhood tensions, put a pin in that one as well. I want you to think about how like having access to healthy food and safe spaces and like interacting with your community in safe ways helps combat neighborhood tensions. Community deterioration, also put a pin in that because I think that many of the things that farmers markets do can have activities that combat things like community deterioration and delinquency. I'm not sure if delinquency is a good fit for farmers markets, but you can see like there are a lot of things in here that you could say like, oh yeah, we do those things. Maybe we do have this concept of all of these charitable and educational and literary purposes. Social welfare also has that same operated exclusively for language. And so if you're aiming for a C4 or you are a C4, you have to be organized and operated um, in support of this. C5 and C6, they don't have those same restrictions. But again, they're not really the status that most people are aiming for if they're wanting to say, like, we really want public charity status. So focusing on the 501c3s, to be tax exempt, you must be organized under, to be tax exempt under 501c3. Let me not hesitate to say this is the C3. An organization has to be organized and operated exclusively for exempt purposes. So your qualifying purpose or your charitable purpose has to be its exclusive purpose, not simply its primary purpose. So everything that you do must fall under that umbrella and directly support your pursuit of that exclusive charitable purpose. For example, maybe you're providing education to the community. Maybe you're alleviating food desert status by providing access to fresh, affordable produce. Maybe um, maybe you are providing a space for people to gather, to learn about things, to access free or low cost food. Maybe you are offering space for farmers and vendors and producers to collaborate and enhance their offerings with one another. Your commercial activities have to be a side note to the qualifying purpose. And your tax exemption can be denied or even revoked if your activities are too commercial in nature. So the IRS, they see something like a farmer's market and they kind of freak out because they say, well, markets are commercial in nature. They are purely commercial in nature. They are for the exchange of goods and services, for the facilitation of trade, for barter and exchange. Like that's what markets do. They generate economic activity. Generally, if we have economic activity, we have the expectation of a profit, and those things are very commercial. So when we're thinking about the commercial activities of your organization, We have to ensure that they fall within and under that umbrella of your charitable and your qualifying purpose. This is to prevent nonprofits from having an unfair advantage over other commercial enterprises. And if you don't have to pay taxes on your profit and you can use more favorable labor laws like using volunteer labor, then it can really undercut those profit generating activities. And um, not only are states and federal governments concerned about charitable activities, they're also concerned about revenue, right? They have a revenue base that they have to maintain to ensure that they can continue providing services and operating the government. And so, if we have a bunch of commercial enterprises that are seeking tax exempt status, that means they're not paying income taxes. And so, our tax base is eroding. So, there's these competing tensions between charitable purpose, needing to be taxed. Does your charitable purpose truly support those things? Is it commercial in nature? You can see how all of these tensions tug at all of these different things. So, defining your charitable purpose can be one of the following or a combination of many of these things. So, relief of the poor, the distressed, or the underprivileged. That's a great charitable purpose. Advancement of religion, we'll leave that to folks who are advancing religion. Advancement of education or science, excellent charitable purpose. Erection or maintenance of public buildings, monuments, or works. I mean, maybe you're building something, maybe that's pretty cool, but I don't know if that's your entire purpose. Again, lessening the burdens of government, lessening neighborhood tensions, eliminating prejudice and discrimination, defending human rights, and combating community deterioration. So I'm giving this to you because I bet any number of you could take these things and you could craft them. You could identify like, hey, these are the activities we do. These support these types of charitable purposes. Can we massage our charitable purpose so that it is less commercial in nature and more charitable in nature? And do we legitimately do those things, right? We can't lie to the federal government. That's a felony. Okay, now, once you are a 501c3 charitable organization, you have to meet these complicated tests. I'm going to talk you through them. I only want you to be aware that they exist. And if we need to talk about them really specifically, I would love to have a one-on-one conversation with you or with somebody in your organization about this. To obtain 501c3 status, we have to meet two tests. The first one is uh, the organizational test. Do our organizing documents limit the purposes of the organization to substantially engage in those charitable purposes, right? Like we're focused on this charitable purpose, and whether or not our assets will be distributed, like how our assets will be distributed at the end. So we have to meet those organizational document tests to make sure that our governing documents meet those requirements with the IRS. If you work with a capable lawyer, the answer to that should be, yeah, duh, because any capable lawyer should be able to do this with you. The operational test really considers whether you are actually operating in practice in compliance with your exempt purpose, and that is determined in your tax reports when you are filing and telling them about your activities over the year. The IRS is going to evaluate that and be like, okay, those seem like, yes, they do align with your charitable purpose, or wow, that's unrelated business income and has to be treated differently. Then there's the public support test. So remember how I said public charities get 30% or more of their donations from public sources. This is really what separates those private foundations from public charitable organizations. Most orgs want to be public charities, right? Because we have fewer restrictions, we have greater tax benefits. So the public support test really focuses on identifying where is your organization getting its money. If the revenue is primarily from the public as a whole, or if it's from the public as a whole, then you probably meet that test. If you have like one rich benefactor in your community who is just donating like all of their legacy wealth to you, you probably don't. But if you have a really rich benefactor, come talk to me. We'll think about ways we can get that money into your hands without ruining your public charity status.
Hey,
Now,
Lindy,
yes,
do local businesses count as a public source?
they do. They do act as a public source. Mhm. Yes, somebody at the IRS does read those 990 narratives. And guess what? The IRS has been one of the, like back in the 60s, they were one of the first government organizations to use like primitive machine learning and sorting and like primitive AI. So the IRS is actually integrating some of those things into the agency to do some preliminary screening. So yes, they do. And in fact, knowing that those things are read and are reviewed now, it's even more important to not like just embed red flags in your documents, things that you know will alert, like trigger the IRS, right? We know we can tell from some of their revenue rulings and their denials, and we'll talk about this. What are the things that like raise the hair on the back of their neck and like, like waving a red flag in front of a bull? We will talk about those things. Uh, yeah, that's fine. If it works for you, Rebecca, keep going with it. If you haven't changed it a lot, if your activities are still the same, there's no reason to recreate the wheel. Okay, the public support test is a little bit more complicated than at first blush because it's taxes, so of course it is. There are two versions of the public support test. I'm going to go over the first one in general because I mean, and then I want to go over the second one in particular because I think it will more apply to farmers markets. So the first version of this, the public support is this. If you receive what the IRS calls a substantial part of your income, more than a third of your total income from government grants, grants from other charities, and donations from the public. Public does include like businesses and things. It's not necessarily, it's public as distinguishable from like a single private source. A single public source, like a huge government grant, would not tank your status because, again, that's just a substantial part from a government grant. An organization who can't quite get up to the one-third threshold can still achieve the public support test through facts and circumstances if it can show that it really is acting to attract public support. Maybe it's a new organization that's funded by a small set of donors to get it off the ground in the first few years. Um, then the second public support test has two elements, and this is one that I think may be more applicable to farmers markets. First of all, the organization has to receive more than one third of its support from contributions from the general public. So things like membership fees, gross receipts from activities that are directly related to your tax exempt purpose. And then you must receive no more than a third. So you have to get more than a third on the one hand and less than a third on the other from investment income, which, yeah, most folks are not going to have investment income, but sales from activities that are unrelated to your exempt purpose. So, for example, if your association conducts educational activities, does some science experiments, maybe you have like a young farmers group with kids and you're doing youth work, maybe you have a summer camp, maybe you have like a public garden where folks can get a plot of land, maybe you have a food bank, but maybe you also sell like some hats and some t-shirts and some reusable bags with your logo on them. Your hats and your t-shirts and your reusable bags, you may use that for supporting your charitable purpose. Those profits may go back to your organization, but selling bags has nothing to do with providing education, right? Selling t-shirts or selling hats has nothing to do with running a youth summer camp or having a community garden. So those types of things we want to limit, those things that are completely unrelated so that they do not come up to that one-third threshold. So I want you to think really carefully about where your income is coming from and protecting it and monitor it throughout the year. Your treasurer should be looking at these things and making a report to the board of like, hey folks, folks really love our reusable bags. We sold a lot of them. Maybe we should reduce the price so that we don't exceed that one-third level, or maybe we should raise funds in other ways so that we're certainly more than a third on our public support test and are not worried about this imbalance. So for new organizations, the good news is if you're originally granted public charity status, you are presumed to have met these requirements, and the IRS is simply looking for you to have fully met these requirements by the end of your third operating year. So for new organizations, you kind of get a 3-year gimme. For organizations that are operating or have been operating, or you're thinking about going back and trying to get 501c3 status, these are the things that you will need to keep in mind. Okay, that's a lot of information. I'm going to pause again.
I think there's still questions about vendor fees. And then I
Okay.
think another one that's a big one that's out there on everybody's mind. There's been a couple questions about the current administration change and how you see that affecting this entire subject.
Oh
So
my gosh. Well, we will talk about that. Okay. Vendor fees may be related if, again, we have to talk about the facts and circumstances of this. So I promise I will get to this. I promise. Okay. Applying for tax exempt status. Guys, we are going really fast through these slides. I thought I wasn't going to have enough time, and I just realized, wow, we're only like 40 minutes into this. There haven't been a ton of questions, and we're doing great. So the good news is I may get through this faster than anticipated and get through all of my information and maybe give you some minutes back in your day. But I do apologize if you were looking forward to 2 full hours. Okay, keep going. Applying for tax exempt status is where it really, like, this is where the rubber meets the road. So if you want to apply for tax exempt status under 501c3, then we have to use Form 1023. To be recognized under any other category, we're going to use Form 1024. The, um, the applications are not that similar. Similar in some ways, not similar in others. 501, the Form 1023 is like you're writing the IRS your own little business plan. You have to talk about your charitable activities. You have to talk about how much time, how much money, what percentage of your resources you're putting into this. You're going to talk about your budget, your 3-year forecast, where you think your money's coming from, where you think it's going to, if you're making grants to other organizations, if you're providing scholarships or things like that, if you're paying your directors, you'll have to disclose all of those things in your tax exempt application for. Yes, absolutely. You will get a copy of these slides. The tax exempt application process is, you can read it. I'm going to be giving you these slides. That link will be clickable. You'll be able to go right to the IRS page. First off, we have to meet those state level registration requirements. So you've got to have your entity formed, you have to have proper bylaws in place, your articles of incorporation. We also recommend that you have a conflict of interest policy because the IRS is going to ask about it, an annual conflict of interest disclosure statement so that your board of directors or your volunteers can fill it out, and a donor acknowledgement form so that when you do receive donations or folks do send you gifts, you can send them a nice letter saying thank you and here's our tax ID number and here's our tax ID, our tax exempt status. Form 1023 requires you to provide, it's currently at 40 pages of information, plus some extra schedules, plus all of your governing documents, plus a narrative description, again, like basically an essay about what your organization is going to do. The IRS on their website, they estimate that it takes 100 hours of work for somebody to complete these forms correctly. I was shocked to see that because even I do not think these forms are that complicated. But if you think about all of the work that has to go into the documents that the form requires, like I have to make sure I have my bylaws. Do we have a conflict of interest policy? Do we have all the supporting documentation? Can we provide this financial information to the IRS? Then yeah, there is a significant amount of work here. The filing fee, uh, yeah, Tim, seriously, like tons of hours. It's like it will take over your life and consume you for a little bit. The filing fee is $600. So it's a significant chunk of money to file with the IRS. And the timeline is 6 to 9 months. And I just looked up what applications the IRS is currently processing because they published this on their website. They're currently processing applications submitted last June. So what is that? 6, 7, almost 8 months ago now. So they're about 8 months behind on their applications. And then they say that it only takes them 122 days to review a Form 1023. So that's another 4 months. So we're at like 6 to 7 months behind, plus another 4 months. It takes a long time for these applications to go through. The good news is, once your tax exempt status is granted, it will apply retroactively to the date your organization was formed, with an asterisk if you file your tax exempt application within the first 27 months of your organization's existence. So, I mean, if you're forming your organization and you're doing this within 2 years, you should be just fine. It is, yes, I could share some conflict of interest forms with you. It is a little bit hard to wait. and just see like what's going to happen because you don't know. But the nice thing is once you get your tax exempt application in, you may begin receiving tax deductible gifts based on the presumption that your tax exempt status will be granted and you will be able to do that. Now, again, with farmers markets, I do encourage some caution because the IRS has a history of saying, like, oh, you're applying for a 501c3. Just kidding. We're going to stick you over here in a C4, C5, or C6. And it drives me nuts when they do that because, like, you should at least come back to me and ask me about my charitable purpose, about my exempt activities, give me a chance to make a fighting case about my exempt purpose. Um, but the IRS has done this. It is very difficult to know what's going, like how the direction at the IRS is going to change with this. I don't imagine that it will change a lot, but we are seeing more, I would almost say like IRS leniency on these things than we saw back in the like 2010s and 2015s, right? The 20 teens. So I don't really know. I wish I knew. One thing that is interesting is we have a new taxpayer advocate, and I wonder if that is sort of shifting things at the IRS, if they're able to like advocate more for more leniency on this. Okay. Um, Identifying your qualifying purpose. This is the single most important thing that you and your organization can do. You're unlikely to be actively pursuing religious or literary goals. You're probably not preventing cruelty to animals or to children, although we should all be doing our best to prevent cruelty to anyone. You're probably not performing scientific testing. You're probably not pursuing public safety type things. You're probably not promoting amateur athletics. So this really leaves two options for the IRS: education and public charity. And remember, public charity is that one that has all the lists like relief of the poor, combating community deterioration, enhancing community connections. So here are some examples of activities. Educational activities. Maybe you're hosting health and cooking demonstrations. Maybe you're offering classes, informational materials, summer youth programs. Maybe you're giving folks information about what local products are, how to use them, how to access them. I know that when I go to my farmer's market, I see things that are not in the grocery store. And sometimes I don't buy them because as a consumer, I don't know how to use them. But if my friendly neighborhood food association was like, hey, here's some helpful material, or here's a cooking demonstration for how to do that thing, I'd be like, oh my gosh, I bet it tastes great. I now know how to use it. It's a nice educational enhancement. Then you can also look at all of those charitable activities, relief of the poor, lessening the burdens of government. This is a huge one. Do you give away free or low cost food? Do you participate in a SNAP program or a food stamps program? Do you have like a free produce box for seniors or like a neighborhood CSA for low income folks? Are you combating community deterioration? These are all things that farmers markets and local food hubs and community associations do through their activities. Maybe you're acting as a small business incubator. That also is important. If you have local government folks who are willing to write you a letter or say, hey, the such and such association does some amazing work for us. We love sending our youth there in the summertime, or they've been able to donate these number of food to our community. Get some letters. Have your local community show how are the activities that you are participating in? How are those lessening the burden of government, enhancing your community, supporting the people there? Combating that deterioration. These are really powerful things. And I have no doubt that those of us who are drawn to public charity status because of our values and our social justice principles and our deep belief that people should have access to healthy food in affordable ways and folks should have the ability to make a living by growing things on the land, I have no doubt that we can use these things to enhance the description of our charitable purpose and communicate all of the things that you are already doing well that support these types of things. Here's some suggestions for you. Focus on how you help the public in general. not just vendors. So, like, we're not just there to provide a space for people to sell and trade and barter. We're there to provide a space for the public to congregate, for them to interact with one another, for them to learn, for them to connect, for them to see arts and culture that you host, and to, explore new businesses and new community resources. Consider calling it something different than a farmer's market. There is no rule in the world that says your organization has to be called a farmer's market. You could be something like the Portland um, Small Business or the Portland Community Food Association, and you have a farmers market that is part of, in support of your charitable purpose. You don't have to necessarily say, hello, IRS, we're putting all of those red flags out here right from the start. We're a market, we're a farmers market. We already know what triggers them. Let's not like do it on purpose. Clearly articulate how you're educating the public about the benefits of healthy eating or preserving agricultural and growing knowledge, the impact of buying locally grown food, the impact that it has on people, on the planet. Like you can weave in environmental principles or like uh, green energy principles by talking about things like carbon footprint and food waste and all of those things. These are really important points to weave in. Include all the information related to public and education, like nutrition education, service to low income at risk or vulnerable populations, talk about community fundraising, talk about support for other nonprofit organizations, talk about your food security work. All of these things are important. All of these things talk about combating community deterioration, lessening neighborhood tensions, lessening the burden on the government, relief of the poor, taking care of folks. Now, we've received lots of questions from the IRS because we have lots of clients who are in this space. Many of them are not farmers markets because they've listened to our counsel and changed their name from something different. So we've received these kinds of questions from the IRS when they come back, like, all right, something in here looks a little bit red flaggy to us. So now we're going to come back with questions. So I'm sharing them with you. I suggest that when you are thinking about this, when you are crafting your own application or when you're talking with your board or your volunteers, when you think about these things, answer these questions up front. Like answer all of the things at the beginning so that we prevent them from coming back with more questions. So, for example, your application indicated you're receiving income from your farmer's market, maybe merchandise sales and other product sales. Again, flag commercial purpose. What's going on here? We need to know. So they've asked, hey, provide the following. I'm going to slowly scroll through these and show you the types of things that the IRS is asking for so that when your application goes in, you can be as prepared as possible to navigate these things. And you can, if you do get more questions, you can come back to your application and say, as we said in our application, as we further describe, etc. So things like where and when are your markets held? Do you purchase the products or are they for sale directly? Do you charge folks fees? How are prices determined? Do you place any limits on the prices? Like, are you saying, hey, everything has to be, 10% below what you would sell at this farmer's market? What differentiates you from other food or delivery services? Describe your process for selecting who gets to come here. What roles does community engagement play in your work? Are there partnerships, collaborations that enhance your offering? Explain how what you do is distinguishable from a commercial farmer's market. Again, like the IRS is pretty transparent about the types of information they're trying to gather and why. So, uh, do vendors pay fees to have a space? How do you set those fees? Are fees required? Are fees a suggested donation? Describe if you have a cost sharing program, provide any contracts or any agreements related to these things. And then they want to know what percentage of your funds are dedicated to this and what percentage of your time. Is this really a substantial activity that perhaps competes with your charitable purpose, or is it something in your constellation of other charitable activities that supports your overarching qualifying purpose? So Other considerations that are going to take us back to the beginning of the presentation when we talked about board composition and board responsibilities. One of the other areas of scrutiny that the IRS will have on your application is, do you have vendors or individuals with financial interests that are serving on your board? That right there is going to weaken your application because it's going to look like these people have a personal sort of vested financial interest in your activities, and it's going to create a conflict of interest from the start. So anyone that has those business interests in the organization is probably going to have a conflict of interest. That's going to it's going to be a flag to the IRS. Again, we're trying to help you craft an application that is honest, that is transparent, and that is likely to go through without too much friction or too many, like, oh, and another thing from the IRS. Um, a vendor-only board really contradicts the principle of a charitable organization, where it can't be for financial gain, and vendors clearly have a financial interest in the market's activities. If you want vendors to have a role in your organization, that's totally fine. They absolutely can. You could consider having like an advisory committee, or they could hold ex officio roles, which means they don't have a voting voice. They just get to participate and share their perspective. Um, you could also have like rotating representation on the board, or, like occasional meetings, like just like you would want to have meetings with your community or meetings with like the folks who are participating in your programs to see, is this meeting your needs? Are there things that we could do better? Um, are there things that we could do to enhance our offerings to you to strengthen our charitable purpose? So when you are thinking about your tax exempt application, you also have to be considering who is on the board, and is that going to raise any red flags for the IRS? Okay, questions about that. Our next section, actually, maybe we want to take a quick break. Our next section is going to be talk about, oh, fiscal sponsorship. Okay, and then we're going to talk about case studies. So any questions so far? Amanda, go ahead.
I think we're starting to get to the point where people are like, but what about this? And what about that?
Nice.
So maybe we do want to take a little pause here and get into some of those. There's a question from a farmer's market looking like they want to build like a sister organization, a 501c3, as a way to fund a bunch of their vouchers for veterans programs, their kids and senior programs, and having, am I understanding that right, Linda, that your organization wants to have, your farmers market is organized in one way, and then you want to have another organization that's a 501c3? Yes, that's what she's asking about.
Okay, great. Linda, I would say you are probably on the right track. Again, a 501c3 can have multiple activities. Your activities as a farmer's market can be, one small thing that you do, like you were saying, with reimbursing vendors, having vouchers for veterans program. All of those things can be encompassed. You are on the right track. I love how you're thinking about it.
And then there's a question about, does it help if vendors are members for a 501c3?
Um, I'm going to let my bias show here and say I am not a fan of membership organizations. I um, if you had a public, like an Oregon public benefit organization with members where your members have like voting rights, I would say no, we definitely don't want your vendors to be members then, because wow, now they have the chance to elect directors and change the bylaws, and they really have a vested financial interest as those legal members, the members that are legally designated as such with those rights under the Oregon statute. But if you have a casual members program where you're like, like I could be a member of the market as a private citizen, and maybe like, my $50 a year dues gets me like a couple of, I don't know, a bucket of free strawberries a year or something. I don't know. Or I maybe I get my free tote bag, right? My free reusable bag with my membership. That is great. That enhances the support. It makes people feel like we're all in the same team, that we all have like the same support of it. So cautious about the term members. If we're talking about legal members, no, that's a non-starter. If we're talking about like just sort of colloquial casual members, yes, that's totally fine. And your bylaws should make this distinction, and your tax exempt status, I mean, your tax exempt application should also make this distinction.
And then one more question about are there any benefits to if the staff of the farmers markets are paid versus being all volunteer?
So if you are a 501c3, then you can engage with volunteers, right? You can have folks come in and volunteer for you, and we're not running afoul of labor laws. But other organizations like C4s, C5s, and C6s, they don't have that same ability to do that. It's really only C3s that can accept those essentially donation of my time and my labor. Um, so again, this is one of those things where facts and circumstances are going to kind of dictate. If you're a C3 and you have folks who are willing to serve as volunteers, Lord bless you. Like, you are the most fortunate folks in the universe to have folks who are willing to do all of that work for you for free. If you have the capacity to pay a market manager, do so. It will not harm your application by showing we have paid staff, or like, this is one of those things that takes a lot to manage, and so we have paid staff. You may want to be careful to really designate them as a market manager. Maybe they're more like an administrative like operator, or maybe a director of operations, and they oversee all kinds of things, again, within the constellation of your charitable umbrella and under your charitable purpose. So, for example, if you are saying that running your market activities is 20% of what you do, but you pay your market manager like 100% of your budget, there's going to be a mismatch there. The IRS is going to be like, flags, help us understand this. So whatever we do, we want to make sure that it's in line and balanced under that qualifying exempt purpose, to demonstrate that we are not um, an, a substantial part of our activities is not for commercial purpose.
Okay, that brought up the question when people heard that other types of organizations should not have volunteers. They would like you to expand on that.
Oh gosh. So yes, this is a tricky thing. So workers' comp is for employees, folks who are covered under employment relationship. The the state always is going to have issues with this, but they don't really get to argue with the feds, because national labor laws say, like the Fair Labor Standards Act and the Internal Revenue Code, say you can do this. Yes, your workers' comp may actually cover volunteers if you have a policy that expands it to that. You have to specifically tell them that we're doing so. Also, if you're using volunteers, we recommend using a volunteer liability waiver, something that says, I'm doing things for this organization. I may be lifting things. I may trip and fall. Things happen. I may get stung by a bee. Like, maybe you need just a simple volunteer liability waiver to provide you with a little extra protection, just to make sure that um, all your bases are covered. Okay, more questions. These are great. I love it.
I think we got the ones that are related to this.
Okay. Okay. All right. We are going to talk, and I'm just going to drop this as a nugget for folks who are like, wow, tax exempt status sure seems like a hairball. And it sure seems like the lengthy process. And are there any alternatives? And I have good news for you. Yes, there are. There are alternatives. So I want to talk with you for a minute, just briefly, about fiscal sponsorship before we get into our case studies of what didn't work and what did work, so we can compare and contrast those things. Fiscal sponsorship is a formal arrangement where a tax exempt organization brings you in under their tax exempt umbrella, and it offers their legal status and their tax exempt status to a project or a group that's engaged in activities that are related to their charitable mission. So, for example, if you, as like a 501c5 or 6, or even a 501c4, want to go out and say, hey, we want to get a government grant for this thing to bring into our market, but we don't have 501c3 status to get that. Like, we're not eligible for that grant. You could go out to an organization in your community. Maybe it's a Boys and Girls Club. Maybe it's the YMCA or YWCA. Maybe it's somebody who offers youth programs, and you say, we want to get a grant to put in a community garden for kids to grow food for our summer camp. And we can't do it because we're a C6, but can we be fiscally sponsored by you and go apply for this grant? This directly serves your purpose, YMCA, of like taking care of youth and, you know, lessening the burden of government, combating community deterioration, all of those important charitable purposes. And your fiscal sponsor could say, wow, what an amazing idea. We would love to partner with you on that. Please take the lead. And it is actually now a contractual arrangement that is respected by the IRS for federal income tax purposes that allows you to, that project that you're doing to come under the fiscal sponsorship of a tax exempt 501c3 organization to receive those funds and do that work. It's a remarkable arrangement. It is not limited to only like loose associations of people who want to do like, oh, we're going to do this like mutual aid group here and we need a fiscal sponsorship. It is you can be a for-profit business, you can be a nonprofit association or some other type of tax exempt org and be fiscally sponsored by a 501c3. And it is a simple contractual agreement that we can help you put into place that says, here's what we are accountable to with our fiscal sponsor. Here are the services the fiscal sponsor is going to provide to us. You have to make it clear that you're fundraising or getting the grant under your fiscal sponsor. The money flows through them. Generally, it has a fiscal sponsorship fee that's deducted for the privilege of using that or for whatever services they are providing to your organization. And then you can focus on your core mission. They can handle administrative tasks like processing donations or qualifying for that grant and ensuring compliance with the tax laws. So fiscal sponsorship, I mean, I know my nerd is showing, but fiscal sponsorship is kind of cool, especially if you're like, we haven't really decided if we want to go for 501c3 status, or we have a grant that we need right now and it's going to take us a long time to get through there. Fiscal sponsorship can be a great idea. The advantages, like I said, gives you that quick start. You can just jump right into your project without having to formally establish your nonprofit. Or if you've already got your nonprofit, you don't have to formally apply for 501c3. Or if you have a different kind of tax exempt status, you can go under that. It can save you money on things like administrative overhead and operational burdens because you can then be insured by your fiscal sponsor. If there's an increase in insurance, you may have to pay for that though. You also can really benefit from your sponsor's expertise. If this is a nonprofit that's been operating as a C3 for a while, and maybe you haven't been a C3, you're a different kind of organization, you can learn from them about the nuances of public charity status and engaging with your donors and how do we communicate on those things and what are we allowed to do in terms of advocacy and what are we allowed to do. And the most important, it gives you the ability to get those tax deductible donations and apply for those grants. So, pretty great. There are some disadvantages. It's not all sunshine and rainbows. Exactly, Rebecca, your comment right there in the chat. Make sure there is a good fit in the mission, or you can endanger your community partner. You are going to be subject to the rules of your fiscal sponsor because the most important asset after your reputation is your tax exempt status. And if you have that fiercely coveted, definitely hard to get 501c3 public charity status, you're going to protect it with your life. And your directors of that organization have a fiduciary duty to ensure that that tax exempt status is protected. You see how like everything is coming together here as we think about all of these different things. So you may have less control because your fiscal sponsor will have oversight over you. And depending on what's in your fiscal sponsorship agreement, will have the ability to tell you to do or not to do some things. Fiscal sponsors typically charge a fee. So it could be anywhere from 3%. Holy cow, I've seen fiscal sponsorship fees this year or last year. I saw one as high as 23%, which just seemed really, really high. But then you look at what the fiscal sponsor was doing. They were doing all the back end administration, they were administering all the overhead. The organization literally just had to do their work. They didn't have to do anything. And so that was worth it to them to be able to just freely focus on pursuing their charitable goal. If your sponsor faces issues, if they're like a small organization or they're fiscally unstable, or maybe they don't have a very well-run board, that could cause some instability for you. So make sure that you choose wisely. And they can be limited in duration. A good fiscal sponsorship agreement will have the process for uncoupling, like if I gain fiscal independence, if I want to pursue a different fiscal sponsor, and it should say your funds follow you. If there's any funds remaining from that grant, they go with you. They don't stay with the organization. They go with you either to your own fiscal independence or your new fiscal sponsor. So be aware of fiscal sponsors as an option. Do we have any questions about that? Okay, I'm going to keep moving. This is the good stuff. We're going to talk about the good, the bad, and the ugly. But first, we're going to talk about the bad and the ugly first. So, the IRS denies farmers markets all the time. Like in the 2012s, 15s, 16s, they were just like left and right. No, sorry. No, sorry. It was like, batting cages. Every single one. They were just batting them down. And they were really fortunate to publish some things about this to give us insight into what does it look like when it's done wrong. Um, uh, so with this one, the IRS denied their tax exempt status to a farmer's market, and it highlighted the challenges that we've been talking about this entire time, distinguishing between those charitable and tax exempt activities and the non-charitable taxable business activities or those commercial activities. This ruling really, really gave us a lot of insight into how the IRS is looking at these things and whether your business activities are in alignment with your charitable purpose. These are the key facts for yes, I can get you the opinion number. The key facts for this are the purpose was to strengthen the natural products economy by developing sustainable market practices. Like you can see, like now that you all have your charitable purpose goggles on, we can see, whoa, like red flags, right? That idea of developing sustainable market practices is really looks like something that's commercial. Promote healthy lifestyles through regional products. Now, remember, like here, they're talking about products. They're not talking about education, community engagement. They're not talking about like community events. They're talking about regional products. Engage in environmentally and socially responsible programs. I mean, that one is probably fine. Support other charities by providing market space for outreach. Like again, that just seems really limited. You like as we're looking through this, I know you guys can all think, okay, they could have written this better, right? They could have worded that better. They could have described this better. Whoops, not next slide then. And they describe their activities as a weekly marketplace for farmers, businesses, and artisans, with special events for local craft vendors and providing some educational programs and space for nonprofit promotion. So they're like, we do have some charitable activities, like we're partners with other charities, but not a very strong application, as you can see. Then the governance, they were managed by a board and the market manager, but some of the board members were also vendors. And so this raised concerns with the IRS about private benefit and those conflict of interest. And then the revenues and expenses of the organizations, they were funded by donations and vendor fees, and their expenses included things like insurance, marketing, and events costs. And I think it was this one right here, marketing, that really flagged it for the IRS because those of us who are charities, we call it donor development. We don't really call it marketing. And we're really more focused on fundraising from the community and making sure that our organizational activities are provided for that. So this is what the IRS said. This is why we don't like it. We are concerned about private benefit. The market was primarily benefiting the vendors, similar to like a for-profit art gallery. That is the analogy that the IRS brought up is that, okay, an art gallery is also a place where vendors can come to exhibit their wares, and an art gallery can also have like, education and provide that, but an art gallery is not fundamentally nonprofit. There's not anything that's fundamentally charitable about that. And this market was not able to distinguish how their commercial activities were really distinct or distinguishable from that sort of an analogy. They had concerns about private inurement. Inurement is a tax term that means private benefit, that I, as an independent individual, stand to privately gain from some of the financial activities. So again, like we talked about with board members who were also vendors, conflict of interest concerns, private inurement concerns, possible violation of IRS regs. Their educational activities were really secondary to their commercial purpose. Like if we scroll up and look at it again, you could see like providing space, promoting regional products. Oh, educational activities sort of as an afterthought. Um, and the key takeaways here are please clearly articulate your educational, your charitable purposes to emphasize the public benefit over the vendor benefit. And then we have some successful Oregon nonprofits. Now, this case study right here is a mismatch of um, like 4 different successful farmers market slash food hub slash community food organizations that we helped this year. Every single one of them has some sort of farmers market or public market component, but was not their primary purpose because we're taking pointers from the IRS. We are taking notes on their decisions and we are like following their instructions and their guideposts, be like, okay, this is what we need to do. So um, our Oregon nonprofits were dedicated to supporting local agriculture, providing fresh, locally sourced produce to the community. Their focuses have really been on sustainable farming practices, community education, economic development, lessening the burden of government, uh, preventing community deterioration, enhancing community connections. All of these things are right in there, right? The mission is really to enhance community health and sustainability through local agriculture, and they do it in a variety of ways. Okay, now think about it. Like your charitable purpose, it's that overarching umbrella under which all of your activities then fall. So, offering educational workshops, sustainable farming, healthy eating, providing resources and support for small scale farmers and new agricultural ventures. A few of them were offering youth programs or some community garden benefit. Every single one of them had a food bank component to it where like folks could donate and they would help administer that food bank. One of them had a CSA community, a CSA box for seniors. So like there's all these things you can see. Okay, charitable purpose, charitable purpose. You can see how it flat slots into those things. Um, I really believe that these applications were successful because they really emphasized educational and charitable activities. We hardly talked about commercial activities except for a brief mention, and that was honest. These organizations have a lot of activities. Their farmers market was maybe 1 out of 4 of main activities. So key elements include educational focus. We're really talking about sustainable agriculture, preserving food systems, combating food deserts, combating um, poor health and poor nutrition. They demonstrated their community benefit, how their activities supported local farmers and contribute to community well-being, lessening the burdens on local government. I keep coming back to this language. If we use the same language that the IRS is using in their statutes and in their regulations, if we can echo that back to them and help them see how we are doing these things, and the direct result of these activities is these charitable outcomes, it helps guide them to a yes. And we have really clear mission alignment that all of these activities are aligned with the mission to promote sustainable agriculture and community health. It all comes back to those things. It's not about supporting local vendors. It's not about having a space where local vendors can sell their goods. It's about getting into that charitable purpose where our activities collectively support that. So clearly articulate your nonprofit's educational and charitable purposes in those tax exempt applications. That's the single thing the single most important thing that you can do, and the thing that will have the most impact on whether that application is successful or not. Okay, that's like so much information. I'm going to pause here. Here's my contact information if you want to reach out to me. This is a great time for us to go over any questions that we didn't get answered before. Chat with me if you like. I'm here until 11. So we have plenty of time to chat. I'm sorry, Amanda, I thought this would go longer.
No, this is great. I think the questions are going to start coming in. And one thing I know that I would still like to hear, though, my question is when a farmer's market has their nonprofit status as under a state entity, but they haven't gone for federal status yet. What are they? How long can they keep being that way? And what tax form? What do they do at tax time?
Okay. So if you are just a loose association of, are we, okay, let's talk about a couple different scenarios. First, let's talk about those who have organized into like maybe a nonprofit, but we haven't gotten our tax exempt status. Okay. If you're organized as a nonprofit, but you have not pursued tax exempt status, you are considered taxable under federal income tax principles, and you must file a tax return. But we are only required to pay taxes on our income. So if your market is like operating at zero profit or not turning a profit at all, you have no obligation to fill out a tax form because you have no income to report and pay taxes on. Um, we could talk individually about whether or not you are over certain thresholds, but those are very nuanced. And I would want to talk with you about that individually to see, are you over certain thresholds? Now, if you are an association that has not organized into a legal entity, you're just an association. You're just an informal association of people who are like-minded and working together. You are not a nonprofit. You are not a for-profit. You are probably an unincorporated partnership, which is a weird sort of legal status. Um, that I would want to talk with you more to see. Are there things that we can do to like protect you a little bit more and to formalize your operations to eliminate some of the ambiguity and uncertainty about where you're going, and maybe provide you with a little bit more stability so that as people grow and change in your organization and folks come in and out, the organization still has the ability to remain intact and continue its work. Because as we know, when it's an all volunteer organization and like your most committed volunteers drift off to other things, then often the organization or the work that you were doing is what suffers that lack of dedication. Okay, Amanda, did I get that question or do we have
Thank
more
you.
nuances?
That one.
Okay.
Besides covering how to become a 501c3, we have had that particular question for many years. So I'm glad to have that
Mhm.
one on tape and be able to give that to people. Um, Going back into the chat, some of the questions that are coming up. One was, is there a risk for a board member being compensated for services performed?
Um, you absolutely may compensate board members. The only rule is your bylaws have to say whether or not it's allowed, and the compensation must be reasonable and for services actually rendered. So, I mean, like we all know what would be unreasonable. Somebody gives like 10 hours of work and we pay them $100,000, right? Um, but reasonable compensation could be $30 or $40 an hour, or depending on what they're doing, like maybe your board member is preparing your 990 for you, and instead of paying an accountant, you're paying them to do it. Yes, you can do so. The important thing to keep in mind is that if a director is going to receive compensation, they should not vote on that decision. So they should be excused from that decision. Your meeting minutes should document that. Like we discussed paying Lindy for her services to the farmers market. Lindy left the room. The rest of us talked about it. This is what we decided. This is the decision that was made, right? So you just want to demonstrate that there was no conflict of interest in that decision, that I was not there attempting to sway the vote or increase my salary into some unreasonable level.
Great, thanks. Belinda, I think Belinda had a question that was the one that I was just asking about. If people don't want to, if markets don't want to go for tax exempt status, Belinda, let me know if that didn't cover, if Lindy's answer didn't cover what you wanted to get to. We can get into some more detail. Peggy is asking, do nonprofit grants like our Double Up Food Bucks programs count as income? What about grants that are not designated for SNAP matching?
So, um, okay. This is where we have to think about who are the different entities in that transaction and what are the two-sided transactions for each one. So if you receive like a nonprofit grant, and you are a tax exempt organization, no, you don't, okay, it is counted as income, but you do not have to pay income tax on it. If you are an organization that has received a grant and it is you are not a tax exempt organization, yes, you do need to pay income, or it does count as income. And if there's any excess left over after your expenses, you would have to pay taxes on your net income. So this is one of those things where it depends, like, okay, um, to you, if you're tax exempt, it is income, but it is not subject to income tax. If you are not tax exempt, it is income. Your expenses have to be deducted off of it, and then whatever remains is taxable as income. Okay, wait, there's one more exception. There are some federal and state grants that specifically say that they are not subject to tax. So, for example, in the pandemic, when we had all of those like loans and grants going out, the federal grants were not taxable. Like the pandemic grants were specifically not taxable. We also have some other grants that were given to like state departments of commerce to then give to businesses to administer, and those are specifically designated as not subject to income tax. So there may be some special federal grant programs that, due to the terms of the grant program itself, are not subject to income tax. This is a really complicated area, I'm sure, as you all can like see and understand.
Um, let's see, I'm looking to see if there's some more questions coming in, but maybe this is a good time if there's anything you want to say about current administration and how this might be
Oh,
going forward.
okay. Um, there is a lot of chaos in Washington, D.C. right now, and it is unlike anything that we've ever seen before. There are just a lot of questions about, can they actually do that? And so what we see is an announcement, a lot of energy in the news outlets and on social media about the announcement. Um, Somebody with a clear head and a clear understanding of federal policy and law says, no, you can't do that. And then the action gets walked back, or it gets stopped, or it gets blocked, or it's being litigated. So it becomes an exhausting cycle for us to monitor of like, what's happening? How is this going to impact me? Is it even happening? Oh, now it's not. Oh, now it's like a judge has blocked that. Oh, now somebody has said that's not okay. Oh, now they're keeping them out of Treasury. So my advice to you is this: wait 5 days. Things are going to, like, there's going to be these really chaotic news cycles that are going to cause concern, sow confusion and uncertainty, and they are meant to destabilize us and just to distract us from our mission. Don't be distracted. Do your best to stay focused on what you're doing. And if you are wanting to stay up on all of this news and like, how does it affect me? I strongly recommend that you go over to Nonprofit Association of Oregon, NAO. They have a legislative newsletter that they're sending out like every other day right now that's tracking these developments. And I love that because they're a very respectable source of news and information. They're tracking these things at a federal and state level. And it's good to know, like, okay, I can get an overview without having to go to, like, I don't know, CNN and get just honestly triggered by all of this just chaos that's happening. So I can't offer you any crystal ball because I can't forecast what's going to happen here. All I know is this: tax laws are really hard to change. Um, what the president says is not always something that actually can happen or is that's real or that's true. So, like, don't set your course based on those things. Go and find reliable information and rely on that to help you make decisions, and then allow information and experience to inform each of your next steps. Try to stay fluid, try to stay on the balls of your feet so that you're not caught by anything unexpected, but do your best to just stay steady and true to your purpose and not be distracted by this honestly, it's meant to distract us from our work. So that's my advice and my perspective on what's happening at a federal level with all of our federal grants. Shrug.
Thank you, Lindy.
You're welcome.
Um, so Maya is wanting to get started on work of having a farmer's market, and she's starting a new market this year and is wondering, do I need to have a 501c3 before the market starts up? Or let's see, actually, here's what they actually say. I'm starting a new market this year. Do I need to look into starting a 501c3 before the market starts up, or how would that look? And they just get going.
So I would say that you definitely want to have your state level entity formed, and that's going to provide you like the legal protection that you need to make sure your directors are protected, no liability comes in to haunt you. Um, you could pursue your tax exempt status kind of concurrently to that as you're getting up and running. But I would want to chat with you and talk like, okay, so you're opening your market. Let's talk about what other charitable activities you're doing. Let's talk about what charitable purpose those activities fulfill and support. And let's talk about what else you're doing that we could share with the IRS on your application that's going to balance those commercial market activities with your other educational and charitable purpose.
Let us know, Ma, if that answered your question. What other questions do people have? This is awesome. Thank you.
Oh, you are so welcome. I'm going to stop sharing my screen so that I can see, well, I guess your face. It's you and me on this, Amanda. I just want to say thanks so much for your attention, for joining me today. I always feel just a lot of gratitude when folks are like, yeah, I want to I want to hear you talk about these like important but kind of complex topics. I take it really seriously that you trust me to share this information with you. So thank you. Thank you for sharing your time with me. Amanda, thanks for inviting me to be part of this. We really appreciate it. I hope it's been helpful.
Oh, this has been very helpful. And it gives really good examples of how to go forward for the people who are looking to become 501c3s. I see some notes. Let's see.
Nicole, I see your note, like, okay, our market's not going to be tax exempt. And isn't that great to know? Like, at least we can resolve that question, yes or no on the tax exempt front. So now that you know you're not tax exempt, where to pivot? An LLC is a great option for that. You can find more about forming an LLC on the Oregon Secretary of State website, or you can reach out to us. We do a lot of work with small businesses as well. You're welcome.
Yeah, I think the LLCs, people just might want to be cautious about that. We OFMA did make grants to markets in the last year, and some LLCs needed some assistance realizing when they were getting, like what you were saying before, they had income, they hadn't done the expenses yet, and then we're having to owe taxes on that, and that was all very new. And
Yeah,
so
that's a very unpleasant result. Mhm. Yeah. And if we know up front that there's going to be a tax impact on it, we can we can accommodate it, but it's the surprise tax impact that nobody likes.
yeah.
Destin, did you have a question?
Yeah, so some of our board members attended another informational um, webinar or something on becoming a 501c3, and the message there was we're already a 501c4. The message they received was more or less probably don't even try, because not only will you not get approved for a 501c3, they may strip your 501c4 status.
Oh, I would would not be that concerned about them stripping your 501c4. You shouldn't be punished. The IRS is not here to be punitive like that. I have not heard of them like stripping a C4 status after a 501c3 application. Destin, another thing you might want to consider is like a parallel organization. Maybe you have some activities that fit well under a C3 and you want to run your C4 in parallel to it. And then maybe gradually one of those, maybe the C4 sunsets as the C3 takes on those activities. So there are not a lot of dead ends here. We can help you maneuver these things.
Thank you.
You're welcome.
I'm seeing a lot of thank yous in the chat, but I'm not catching another question at the moment. Does anybody just want to come off mute and ask something? Still have plenty of time, so.
I did ask one question that was about a CPA. This is Bill.
Hi, Bill.
You know, CPAs give us a lot of advice and stuff like that. And shouldn't we be able to take them as they know what they're doing and moving on? Or do we really need an attorney when we really get into the nonprofit filings that we do? You know what I'm saying? Guess I'm saying is we're making an assumption that they know what they're talking about. But does that always happen?
Bill, I will be candid with you. I have a lot of CPAs that I love and have deep respect for. The work that I see is when the CPA didn't do it well, and now folks have to come back to a lawyer. So I never see any of the ones where a competent CPA handled it and everything was just fine. I see something where a CPA was maybe in over their head. They presume they know these things and they don't actually, because for tax exempt status is a very unique area and not all CPAs know how to practice in it. So I mean, it depends. If you have a great CPA, you have found a gem. Can you please give me their name so I can refer folks to them? Because I know the names of a lot of not so great CPAs where I'm like, yeah, I've had to clean up their work.
I see a lot of them will file with the state, which is easy to do. It's the federal part that usually stumps them, you know.
Exactly. And I wouldn't trust a CPA to draft your bylaws. CPAs are not lawyers. They don't understand the law. They don't understand the nuances of what is and isn't allowed. And they won't necessarily be able to help you customize it so that it fits your organization. Because there's not really a one size fits all to this. It's not like everyone just fits into a really rigid mold. Your organization is unique from everyone else's. Rogue Valley Growers, you have your hand up?
Hey, thanks.
Thank you.
I just wanted to check in about if you can give a broad overview about how C3 status may change some accounting and bookkeeping practices for a lot of organizations. And then the other piece is I am desperately seeking a solid nonprofit familiar bookkeeper. If anyone has a recommendation, they can be remote. Please throw that in the chat. We have a shortage here in Southern Oregon, and all of the ones that I know from prior work, their books are full. No pun intended there. But I am really seeking some alternative. And then I wanted to offer that question to the group.
Okay, so there are some differences in nonprofit and for-profit accounting principles. It's still the same, like generally accepted accounting principles of like double entry accounting, right? But you are going to have your balance sheet is going to be called like a statement of financial position, and your profit and loss is going to be like called something a little bit different. So like your financial statements are going to be a little different, although they're going to show the same exact information. What really gets tricky with nonprofit accounting is if you have restricted funds or a certain grant that is only allowed to be spent on some things, because then you need to sort of wall off those funds and point the expenses very particularly to those ledgers so that it can be offset. Because if your grant funder audits you and they want to see, you have to be able to show that only the things for that youth community garden were billed against that, $30,000 account. So whether it was the cinder blocks or the person's time or the project manager or the topsoil or the seeds, those things were for it, but your reusable bags and your hats and t-shirts, those were not part of those expenses, right? So yes, that's true. If you tell QuickBooks you're a nonprofit, they take invoices out of it. It's like really difficult. So I would just be careful when you're going through this. Working with a competent bookkeeper or a really good CPA will just provide you so much peace of mind. I'm seeing some folks in the chat, and I love to see it because I also feel the need for this. Our clients ask us all the time, do you have a good nonprofit bookkeeper? Just like they ask, do you have a good CPA? And we have some referrals, but their books are full. They are, because the good ones are always busy. Good ones are always busy.
Lindy, are you able to say anything about At what point a stipend really needs to become a contractor?
Mm, So, I mean, there's two kinds of workers. We have employees that are governed by all of our employment laws as well as minimum wage laws. Move that to the side. Then we have independent contractors. They're anyone who has a formal or informal relationship as a worker for some sort of wages, but it's not minimum wage. It's not necessarily even an hourly wage. Maybe it's just like an honorarium for running the market or, $200 a month for balancing the books or whatever. In that case, I recommend a very simple, straightforward independent contractor agreement just so that if you're asked, you can say, oh, yeah, the board approved that payment. Here's the contract between us and that person. Everything is on the up and up. It was properly approved. Here's how it's paid, etc. That way, if you ever get any questions, you have all the documentation you need to support your position, as well as all of the history of like, how was that decision made if it's ever challenged by the IRS or even by the local employment folks. So again, with things like this, you don't have to necessarily hire them as a contractor, like for an hourly wage. You can say you are performing these services for us on a monthly basis, and we will pay you this flat fee for that. Is that helpful? Hopefully, Belinda.
Yes, thank you. So are stipends okay?
Yeah, a stipend is just like a flat fee in exchange for a set of services.
Okay, thank you.
You're welcome.
Linda, I deeply understand both farmers markets not being able to, not having the income yet or the expenses yet to be able to pay a market manager, but I just can't let this question go by without saying that OFMA has seen that markets are stronger, last longer, do better for their vendors, the sooner they can get to being able to have an employee and actually pay someone to do the work. I know you're trying to get there, but I just have to throw that out there. Other questions? This is your moment to get some time with Lindy. You won't even have to set up the 20-minute check-in with her later.
Oh no, they're like, no, we can get 20 minutes. We'll get that too. I love it. Please do reach out. We'd love to chat with you and just learn more about your markets and the activities that you're doing and how can we be helpful and just establish that relationship with you. So when you have questions, you know who to come to. Oh, Kendra, what a great resource. Thank you for sharing that. Okay. Bruce, you just came on camera. Do you have a question? Oh, you're on mute, sir. We can't hear you yet. You're still on mute. Sorry, rewind. Still on mute.
Okay. Unmute him, but I cannot.
Can you unmute him through Zoom?
All I can do is ask to. He has to accept it.
Oh.
You were there for a second, Bruce.
My phone is not working.
We can hear you now.
Yeah, my phone's not working great. Just a real quick follow-up on the volunteers in a 501c6 environment. Is it just the liability, like workman's comp liability, really the only tricky part of that, or anything else there?
I think workman's comp is the biggest risk for you. The risk that you have beyond that is a volunteer could go to the Bureau of Labor and Industry and say, I shouldn't have been treated as a volunteer. I worked my tail off for them. They exploited me as a worker. And like you run the risk of having Bali open an investigation. But I mean, lawyers, we talk about real risk and other risk. And I think the real risk to you is more in the workers' compensation. What happens if somebody gets hurt while they're volunteering versus somebody filing a complaint?
Cool. Okay.
Yeah.
Wish you could turn it on.
What else have
What do
we
you
got? Anyone else? Last question. Lee, this was so great. You answered so many questions. Just going. You got so much
Good.
information out to everyone with this session. So I really appreciate you being here and providing the support to the markets in Oregon. And
You're so welcome. Small organizations, small community nonprofits, small businesses. This is the heart of what we do at Rational Unicorn and like the folks that we love to work with. So again, thank you for having me here today. It's a real privilege to be here.